Something weird is happening with Warren Buffett. While everyone is looking at the market and they're trying to make a lot of money out of it, and everybody is very optimistic because the Fed is lowering the rates, Trump won the presidency, and it seems like the market is going to explode in the next 12 months. But there is one investor who is extremely careful and he doesn't buy it. He's actually not investing at all. Not only that, he's not buying any stocks like everyone else out there, like Wall Street, but rather he is trying to sell off most of his stocks. And if it was some random investor out there, I honestly wouldn't care at all. But this guy is Warren Buffett. He's the most successful investor out there with the best track record that you can actually find. And yet this guy, instead of buying stocks because the Fed lowering the rates, because Trump won the presidency, because the stock market is growing tremendously, this guy is selling all of his stocks, and as of the time that I'm recording this video, he's sitting on $325 billion worth of cash. Now, take a moment and think about that for a moment. I don't think there is anybody in the market who has more cash than Warren Buffett right now. And if you actually take a look at this portfolio, you suddenly realize that he has more cash than the amount of stocks that he has. I mean, on one side, his portfolio, where all of his stocks are, from Apple to Bank of America to everything else. On the other side, $325 billion of pure cash. Now, just to let you know that a portion of that money is invested in short-term treasury bills, which means the government bonds that pay an interest rate. But that's almost like cash because Warren Buffett can easily convert them into cash the day he actually wants that. That's a short-term debt in order for him to earn some decent interest whilst keeping that cash. So let's take a look at some of the deals that Warren Buffett made within the entire 2024. So if you take a look at this portfolio, what you will suddenly realize is that, first of all, Apple. His share of Apple at the beginning of the year was around $180 billion, which made him one of the largest shareholders of Apple in the world. Suddenly, it's the end of 2024 and his stake at Apple has decreased to $70 billion. Now think about that for a moment. If you just go back a few years ago to 2016 and 17, Warren Buffett said that Apple is the best business he has ever seen. And guess what? He probably seen a lot of businesses. He has been in the market for like 60, 70, or probably 80 years. And he invested in thousands of companies. And he mentioned that even if the market goes down, even if the stock goes down, he will still continue buying Apple. But yet, here in this 2024, he's massively selling off his Apple stocks. This is the company that everybody is actually looking up to and is considering that this company will worth 5, 7, or maybe even $10 trillion within the next 5 to 10 years. And yet, Warren Buffett is selling his stocks? Does he not understand something? Or is he seeing something that everyone else does not see? Now, another sell-off he made was in Bank of America. He literally sold 25% of all the stocks in Bank of America. Bank of America has been one of the stocks that Warren Buffett has been consistently investing starting from the 2008 financial crisis. And yet now he actually reduces his share in that company by 25%. Paramount Global, he got rid of his entire stake in the business. Snowflake, he also got rid of his entire stake in that business. I mean, he used to have like billions of dollars worth of stocks in those businesses. And now he literally just got rid of them, telling those companies that, listen guys, I don't want to do anything with you. Does that actually tell you something? Maybe Warren Buffett is hiding something that he does not want the rest of the market to know about? Chevron, he sold a portion of his stake in this business, but we don't really know for a fact, but because it's undisclosed amount. But if you know anything about Warren Buffett, he doesn't randomly like sells 1 or 2 stocks out there. If he's selling some stocks in a company, then he's probably selling a tremendous shares. BYD, a company that Warren Buffett said one of the best actually out there, that he sold around 40 million shares of that business. It's an electrical car company in China. It is the largest EV company in China. Ultra Beauty, a big portion sold. Capital One Financial Group. So these are just some of the examples that Warren Buffett are actually sold. I mean, if you actually dig deeper, you will find out that there are some more stocks that he sold throughout the entire 2024. But if you actually go back to 2023, if you go back to 2022, you will find him selling massively a lot of his stocks, especially when it comes to tech stocks such as Amazon, Apple. I mean, he has been a big investor in Apple, so it actually makes sense for him to actually sell some of those stocks. Now, to be honest, he wasn't just selling, he was also buying some of those stocks. So if you take a look at the stocks that he purchased within this year, Domino Pizza, $550 million. Pool Corporation, $152 million. Now, the list is slightly longer than this, but nonetheless, what I want you to pay attention to that is that look at the amount of money that he actually spent buying stocks and look at the amount of money he spent selling stocks. So on one side, he sells tens of billions of dollars of stocks. On the other side, he spends a few $100 million buying those stocks. Maybe if you combine them all, if you combine all the stocks that he has purchased within 2024, it will not be even more than $1 billion. So that actually leads you to ask yourself a good question, is that what exactly is happening with the market? Is he expecting a crash that no one else is expecting? Does he consider the market to be so overvalued that it could potentially crash in 2025? Because if that crash was like 5 years ago, I don't think he would do something like that. But if he's selling all of those stocks today within the entire 2024, maybe he's not confident about the next year or about the next 16 months, about the next 24 months. So let's take a look at some of the reasons that led Warren Buffett to sell his stocks. Now, we can't tell for a fact, we can't be 100% confident and get into his brain, but what we can do is just take a look at his investing strategies, how he has been investing over the years, and his principles of investing, and we can make some conclusions about what could potentially be the reasons behind those stock sales. So the first most important reason, in my opinion, is that he thinks that the market is overvalued. Now, you might not agree with him because there are different metrics in order to measure the market. And if you talk to any investor out there, every single investor has his idea, his understanding of the market works, and the things that he actually pays attention to be important and the things that he actually ignores. But there is one factor or one way to measure the market that Warren Buffett once said that it is probably one of the best ways to actually understand if the market overall is overvalued or undervalued. And that principle is stock market to GDP ratio. So you take the entire amount, the entire total value of the stock market, and you divide it by the GDP ratio, by the GDP, and you multiply it by 100 and you get your ratio. So for example, as of the time that I'm recording this video, the entire stock market value is around $55.2 trillion. So we take that amount and we divide it by the GDP. So what is the GDP of the United States right now? It's around $29.35 trillion. So $55.2 trillion divided by almost $30 trillion multiplied by 100, and we get this number, which is 188%. Now, the next question is that what exactly that number actually means. If this number is less than or more than 100, then we consider it to be an overvalued. If this number is less than 50, then it's certainly undervalued. And if this number is around 50 to 75, then we consider that fairly valued. Makes sense, right? And now take a look at this number and take a look at the numbers that we have over here. It's not just more than 100, but it's almost 200. It's 188. So according to Warren Buffett, he considers the market to be extremely overvalued simply because he mentioned that this is one of the best ways to actually value the market. When he looks at the market, he sees a bubble. And just to give you an example or a comparison for you to have a better understanding of what's going on, compare it to the dot-com bubble. So if you go back to 1999, when internet companies were actually booming and it turned into one giant bubble and the bubble burst, I think it was like 2000s or 2001, around that time. And the market actually collapsed by more than 50%. And 99% of all the companies that had .com name at the end of their name filed for bankruptcy. Even legit companies such as Amazon, which was back in the days one of the largest internet companies, they saw their stock price go from $107 to as little as $7. And if Jeff Bezos didn't secure the funding for Amazon just before the bubble actually burst, Amazon would have actually gone bankrupt and Jeff Bezos today wouldn't be one of the richest people in the world. And that's why if you go back to 1999, the market, if you take the exact same ratio, it was around 200. So 200 it was back in 1999. Today, it's 188. it is very close. Maybe in the next 6 months, maybe in the next 12 months, the market could actually rise to as much as 200, and we might see the exact same bubble that we saw back in 1999. The second reason behind Warren Buffett's cash pile could be is that he simply does not seize any kind of opportunities. You see, Berkshire Hathaway isn't just a company that is worth $50 billion, $100 billion. Berkshire Hathaway worth over $1 trillion, which makes it not just one of the largest companies in the US, but worldwide globally. If you take a look at their cash pile, which is $325 billion, he needs to find a pretty good investment that will get him around 10% annually in order for that investment to make any kind of sense. So he needs to invest this money in such a way where he will make $32.5 billion. Now, I want to ask you a question. How many companies out there make $32 billion in net profit? Not many actually, right? And it's not just about making the net profit. I mean, maybe there are companies that could get him that kind of a return, but Warren Buffett cannot can kind of risk all of the money of the investors in Berkshire Hathaway and throw it into one basket. He must diversify the investments into multiple companies, 5, 7, 15, 20 companies. How many companies make that kind of money? Like, take a look, Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, Meta, and the list goes on and on. And these are all the companies that make up most of the market right now. And if the ratio shows that these companies overall are right now overvalued in the market, or the market is overvalued because of these companies, then he doesn't have any options to invest that money. Yes, if he actually throws like $550 million into Domino Pizza and that investment makes 10, 15, or maybe 20% over the next year, yeah, it makes sense. But overall, it doesn't reflect properly on his portfolio. If he wants to make a 10% annual return, then he must go big. He must make big moves. He can't just go into there and invest that money into thousands of companies. Because with every single company that you invest in, you have an extra responsibility to watch that company, follow that company, know the people that actually manage that company. And that is why with that much cash, I don't think Warren Buffett has plenty of opportunities in order to throw that money effectively and use it effectively. And that is why he's pretty much just sitting on that pile of cash. Now, there is a third reason, and that reason seems pretty logical based on what we know from Warren Buffett. So if you just go back, for example, to 2007, you find out that Warren Buffett was sitting on $47 billion worth of cash. It's nothing compared to $325 billion, but going back to 2007, Berkshire Hathaway was a smaller company. We did not have so much quantitative easing. We did not have so much cash out there in the market. And that is why $47 billion was a lot of money. I mean, just go back to 2007. Remember, you had $100 and you could get a lot of things out of it when you go to the grocery store. But today, $100 is almost nothing. So when the market crashed in 2008, that the Warren Buffett was expecting it to crash, he took $25 billion and he started buying massively stocks. He literally went on a shopping, buying one company, second company, third company, fourth company. He spent $5 billion investing in Goldman Sachs. And the deal he made with them is that 10% annual dividend returns for the next 10 years. So for the next 10 years, every year, Warren Buffett would receive from Goldman Sachs $500 million. So 10 years from now, he made his money back. Plus, he has $5 billion stake in Goldman Sachs. Plus, those $5 billion rose in valuation as the market recovered. Plus, he could buy probably another $5 billion worth of Goldman Sachs stocks at a cheaper price than the market. Another investment he made was in General Electric, $3 billion. The exact same deal, but he invested just $3 billion. So he made his money back. He made, 100% of his return when it comes to dividends. And then he also profited from the capital gains that the stock rose since then. Constellation Energy, $4.7 billion. Dow Chemicals, $3 billion. In this case, it wasn't 10%, but it was 8.5%. Bank of America, $5 billion. So the guy literally was actually expecting a crisis to happen, and instead of buying all stocks and enjoying this short-term profits, he kept actually piling his cash, and when the opportunity struck, he jumped in and he spent $25 billion, the money that made him, and those investments made him the richest person in the world I think it was in 2008 or 2009. And today his net worth is around $150 billion. There is a very beautiful quote that says that buy when there is blood in the streets, and be very careful when everybody is buying. When everybody is buying, a bubble might be bursting. But when there is blood in the streets, everybody is afraid to buy and people are selling at a huge discount. And that's what Warren Buffett loves. Now, what happens with people is that when the crisis hits, that's when they think about investing. First of all, they don't have cash. Secondly, they don't have the knowledge. Thirdly, they don't have the tools, and they will miss that opportunity that happens once in a decade. So if you want to take advantage out of this crisis that's about to happen based on what Warren Buffett is doing, you got to prepare yourself now. And the best way to do that is just check out the first link in the description. Thanks guys for watching, and I will see you in the next one.